Greetings everyone to the first analysis video for the Geospatial Investor. I found a fantastic way to convince you all that I have a case here. In the previous video there was that quote saying you're only going to get linear growth if you're trying to generate prosperity for yourself through salary increases and being a salaryman. You're going to get, however, or actually the people that provide that salary to you, the investors, entrepreneurs, and venture capitalists, they're aiming for exponential growth, and that's where the real payoffs are. One of the things I've done this week, well actually yesterday, and one of the reasons why I was up until 4 a.m. last night, was that I have discovered something amazing about the geospatial industry. So in the last video, I talked about this big watch list, and it's now grown enormously. I think we're up to 27 different businesses. So what this is, all these wiggles on this chart, all of these, and if I make Tesla the main one, all of these 27 stocks are either purely geospatial businesses, or in the case of Tesla or BMW or Mercedes-Benz here, they own a mapping or spatial data or geospatial product. So in the case of Mercedes-Benz, BMW, Intel, Mitsubishi, a bunch of different firms, car firms, they all got together starting in 2015 to purchase HERE maps, which used to be called Navtech. And funnily enough, Navtech was the first company I ever got a job with in Melbourne in 2011 after my master's at good old University of Melbourne. I was very proud to be offered a job with them because they were the world's largest street map data company. The go-to source. Essentially, every single street line on their map globally, a Navtech vehicle had driven on that road to physically verify that it was there. So eventually, they turned into HERE maps. I forget who it was it was Nokia that bought them, and I think at that point they became HERE. And then 2015, as I said, Nokia got rid of them and essentially offloaded them onto a bunch of different car companies. So what's that part of? Well, that's part of one of the biggest tech stories in the world's economy in basically the past 10 years. And that explains why I've got Tesla on this map. I got maps on the brain, kind of a map, but more like a chart. A map of the stock market, if you like. So why have I added Tesla? Well, also in about 2015, actually in 2015, there was a Tesla announced autopilot. And what is the fundamental data set, type of data for autopilot? Well, it's spatial data. It's an incredibly detailed map of every single road, point of interest, etc. Anything to do with the road system where Teslas are sold or where they offer the autopilot service. So what this watch list is mainly geospatial firms like Hexagon, Bentley, what else? Aerometrics, Autodesk, Pitney Bowes is in there because of Map Info. What else? TomTom, Trimble. Okay, so we've got all of these ones, of course, but we've also got other firms where there's been a meaningful acquisition. So GE, for example, they make jet engines, etc. Nuclear power plants. but they also purchased Small World in 2000, a competitor to IQGeo and ArcFM in the utilities network mapping space. So I have added them for that reason. Okay, so, this is the definition of a useless chart. It's filled with wiggly lines, but it seems like Tesla overall is the winner. How interesting. Oh, we also have Google in there because Google went public in 2004, but I think in 2002 they purchased Keyhole, which turned into Google Earth. And I think in 2005 they released Google Maps. So because everyone will remember when Google Earth came out, it was a hit. Like I used to work at a youth hostel. That was when I was at university, and I remember the hostel manager, this guy from New Zealand. No, he was a mechanic, a car mechanic. I think he was a Mercedes mechanic actually, by trade. Anyhow, he was just stunned by it, and he was showing. I remember he was trying to impress all of the girls that came into the youth hostel by showing them Google Earth. It was hilarious to watch him, but that just shows the imprint that it made on the popular consciousness. Like it put the planet under your finger. So it had to be, Google had to be, from IPO, from the initial public offering, from when it started trading, had to be in this list. And you can see it's advanced incredibly. It's up 46 times since the IPO. So what amazing growth. And if we look at Tesla, they're up, wow, 187 times since their IPO. But importantly, they IPO'd in 2010, not 2015, when we actually had to add them to the portfolio because of the spatial data, something geospatial becoming material about that business. So that sort of raises the issue. So a watch list is not like this is maybe not exactly the best way to characterize the financial impact of investing in all of the geospatial firms that are publicly traded that you can buy shares in, plus all of the other companies that have either acquired a significant geospatial firm like GE acquiring Small World, or like Tesla where they're collecting their own spatial data and maintaining their own map as an integral part of their business. So this is where I really, because you can see there's been some incredible growth, but you can't really see as a whole, as an index, how each of these businesses will have performed, or how they will have performed together as a portfolio. So this brings me on to GeoAwesome, or GeoAwesomeness.com. It's a great, I'm sure anybody who's from the geospatial industry has heard of the blog. Slightly over the top in its enthusiasm for our industry, but why not? That's great. So there's this guy Mutukuma Kuma, who I think is one of the two guys that maintains the blog, and he's put together the top geospatial firms in 2021. So that's really useful, isn't it? There's a big long list here, and he's also made a really nice graphic segmenting our geospatial industry into a bunch of niches. We mentioned niches in the previous video, and what we want to find, of course, if you remember, is a fast-growing niche, which means 10% per year, and we want to find the niche leader in the fast-growing niches. So immediately what we think of course, when we look at this this list of niches within the geospatial industry, is we want to find what the star is, the leader is within each of these niches, and also immediately what is it that's not. It doesn't look like terribly much like a blue ocean, does it? I mean, even in the niches with the fewest participants, we're still looking at 6 for infrastructure and asset management. Pardon me, and what's that? 8 for extended reality. First time I've ever heard of extended reality today, but hey, cool. I've been in the industry for 10 years, and if there's anything this podcast is showing me, is just how little I know about, I've been sitting there beavering away at my desk on whatever the project is that's paying me, and all the world has passed me by. So here it is. This is our, in all its glory, this is in 2021, our industry. So this list of links was really useful. So I literally clicked on every single one, all 100 of them. And I've basically lifted out of this all of the publicly traded firms, including Salesforce, by the way. And so here's a really interesting one. So I just happened to spot in the Salesforce URL mapanything.com. So, and there's a nice graphic here of a map, because Salesforce is basically the world's best, most dominant CRM, or customer relationship management system, I think. Who knew that they had a mapping function? But as was sort of apparent from here, it seemed like they might have acquired a firm. So a map anything redirects to there. So let's go for acquired Salesforce mapanything.com. Let's have a look. So here we go. So 2019, there we go, May the 30th, 2019. Salesforce acquired Map Anything. It doesn't say how much for. Do we know? Salesforce is buying Map Anything. TechCrunch, can always look to them. Did not reveal the selling price. Oh well. It's always interesting to have a look for another really fascinating sort of dynamic or part of life and part of the world that this podcast has made me start paying attention to is all of these deals. Another one that I saw was Digital Globe's 2012 acquisition of GeoAwesome for $900 million. So that some of these deals are incredible in value. So yeah, it's really excited to keep this podcast going and start to, I don't know, maybe we can have like a weekly news update. I can get dressed up as like a financial analyst on the news, and we can report on the deals. There's a lot of fun we can have with this. All right, so back to this. All right, so as a result, because from the last video you saw the watch list was significantly smaller. I think it was about 11 stocks. But as a result of that fantastic blog post from GeoAwesomeness, it's now 27, I believe. Okay, so cool. So what I have here, because I was talking about, what's the aggregate sort of result if you purchased all of these IPOs and also purchased these larger firms when they bought or acquired a geospatial firm. So what I've got here is this tool called Sharesight. It's an Australian company, or maybe it's New Zealand. I don't know. Same diff, Hilarious thing to say as someone who makes maps. If there's one thing I'm militant about, it is the need to remove all national borders from maps. If only humanity would do that for itself. Anyhow, so what the hell is Sharesight? Well, basically anytime anybody uses a spreadsheet, you know that there is a software product that needs to be developed. And if there's one thing that all of us know about investing or trying to analyze a business, we crack out a spreadsheet and we go nuts. And I certainly have done that with this incredibly elaborate value investing tool that I've put together with all of these different tabs. Future software product incoming, I swear. All right, so what did I do? Well, as I said, Tesla announced to the world that they were a geospatial firm effectively in 2015. So, and I think it was the announcement from GeoAwesomeness actually was on the 1st of October 2015. So, and I've got a comment here, had to buy from 2015 because that's when they launched Autopilot. I'll change that spelling there, which is hugely dependent on spatial data, which they collect with their cars. So they're basically one of the world's largest spatial data collection firms. Truly enviable amount of spatial data about, especially the world's where Tesla cars can go. So you can see the purchase. This is the purchase settings. So I bought them on the 1st of October 2015, or theoretically bought them. At the time, that was the price. And what else? So another key thing was I wanted, as I said, I wanted to make it an index. So ultimately I want to see how all of these businesses perform together as a portfolio to deliver me some return. So what that means is I had to put an equal amount of money into each business. So that's why I only bought 0.28176 shares of Tesla at the time, which is equivalent to 100 Australian dollars, because that's how that's the currency I'm pretending to have this portfolio set up in. Perfect. So then, whoops, let's go back to the Tesla trade. So then, what this incredibly useful tool shows me is that from when I bought it until now, it's compounded. Remember, we want exponential growth. That's what this whole podcast is about. The other side of the economic life, where there's that gives us access to exponential growth rather than linear growth. So here is exponential growth in action with Tesla since 2015. You can see it's been growing every year at 50%. This is essentially a ballistic degree of compounding and unheard of, except for a couple of businesses in the entire world. And then what it's comparing it to is what's called the Standard & Poor 500 ETF. So Standard & Poor 500 is simply the top 500 firms based on some rules that a company called Standard & Poor, a hilarious name, have created to try to characterize the US market, essentially. So one very sensible method of investing, which I support 100%. Please just ignore everything else that I say in every single video on this podcast, except for this. Buy shares in an S&P 500 fund like this one, and don't do anything else, okay? It is complete folly what I'm doing here. It's for entertainment and educational purposes only, and it's a nice little investigative series, okay? It means that I'm more engaged with my industry and makes me a better professional because I have to get more educated, for example, about all these 27 businesses on this watch list. But there is pretty much a guarantee that this method of investing in any portfolio I put together or stocks I recommend will fail. The best way, the way that wins in the long term in a multi-generational sense, is to buy shares in the index like this one. Okay, rant over. So, but you can see that Tesla has well and truly beaten the index over that time. All right, so that's great news. That's really good news. Now, so let's have a look at some of these other businesses. We can see, I can, I won't bother. You can group them by all sorts of different things, by currency, whatever. Something that, you might be wondering, so are some of these effects, just due to currency changes? Well, you're right to ask, and this tool shows me that in terms of Australian dollars, the portfolio has lost 0.35% due to currency changes. You might also be wondering about dividends because some businesses, not ones that I recommend, by the way, because they got nothing better to do with their money, they pay out dividends, which causes you to have to pay taxes, by the way. But yes, some of the growth in the portfolio now that we're looking at has been from dividends, but most of it, the vast majority, has been from what's called capital gains. All right. So I was going to. So let's look at a pure geospatial firm, an Australian one, probably one of the best geospatial firms in the past decade. So you can see from 2012 is when they started. They were 141. Were they? Yeah, they were 4 cents. There we go, 4 cents when they were. We can see here. So they were 3.5 cents rather. So I bought them on the 1st of November when they first started trading. And look at this, similar to Tesla, over the past 10 years, 10 years of compounding at 47%. The $100 that was purchased, the $100 in shares that was purchased, does it tell me what it's now turned into on this screen? Okay, so the $100 has now compounded at 47% per year, and that $100, only $100, and turned into $4,300. So of what compounding can do, if you have an incredibly high rate of compounding, $100 becomes, you would never have thought that in 10 years you could get to $4,300 from just $100. But if you find a good compounding rate, a good company that's compounding fast, you can get there. All right, so that's interesting. So what about some bad ones? Because there must be some bad ones, huh? You're right to ask. Let's go. Let's arrange this by ascending. So let's look at another Australian one. So this is Aerometrics. Aerometrics actually is a competitor to Nearmap. What does Nearmap do? Well, they were all the rage. There was a huge mania to do with Nearmap. I remember even my mother about, I don't know, 5-6 years ago, even she knew about Nearmap, and she loved looking at the high resolution aerial imagery of her house in Nearmap. So nearmap.com. This is the one. Can we see? Try Nearmap. Oh, we can't. Okay, there used to be a Nearmap that was free. Anyway, it was incredibly high detail imagery. Here we go. Here's what they can do. I mean, you know, and then funnily enough, it shows Mercedes-Benz. Wow. Another business on our watch list. So yeah, this is what Nearmap does. They fly planes at a high frequency, and they get nice high resolution imagery of the ground. So Aerometrics does the same, but it's a smaller business. But a key thing about Aerometrics is they have the highest resolution of all 3D models. So what does that mean? Well, if you go to Google Maps and we go to Taipei 101 and we change it to, yes, Taipei 101, there it is. That's the one in here. Cool, so that doesn't look like much, does it? But if you hold down the control key and then drag your mouse in Google Maps, I don't know if you know about this, it's pretty wicked, you get this incredible 3D view. Isn't it stunning? Well, what Aerometrics does is they create the world's best, most high-resolution 3D city models. And they have 2.5 or 2 centimeter resolution 3D models. It is absolutely stunning what they're capable of doing. So if we're looking closely at this 3D model here, that is definitely lower resolution than 2.5 or 2 centimeters, because if it was 2 centimeters, the detail on this letter would be far better, you know? It's pretty fuzzy there. I'm guessing that Lexus, the text there for Lexus, I mean, it looks like the height of a window around about, so call it about maybe 1.5, 2 meters. And that S is incredibly fuzzy, so we're looking at, you know, maybe, I don't know, 0.5 meter, 0.25 meter resolution, not 0.025 meter resolution. I think that's right. Is it? Or is it 0.0025? I think it's too high centimeters, so it's 0.025 meters resolution. So the point is, Aerometrics has kind of a cool offering. Plus, they're a near map competitor. So okay, so you might be sounding interested. But when they IPO'd in 2019, in December 2019, they have dropped 43% per year. So they have been a terrible investment. So sorry for all of the mess with all these other lines on. But you can see they've only gone down. They've just crashed down from, what was it? Basically $2 since 2019. And they got all the way down recently to 20 cents. So that's also important. You know that I'm being honest here. Our industry is not 100% winners all the time. But the point is that, so I've added this contraction, in this case, into our portfolio. So in this case, our $100 has gone from $100 in December 2019 down to $22 now. Okay, so that's also, that contraction is contributing to the overall performance of this portfolio. All right, so I'm sure your eye is sort of, in the middle of all my ranting on about all this, it has sort of settled on the fact that despite these ones here, and there's a good number of them, 1, 2, 3, 4, 5, 6, 7, 8, 9, that have dropped spectacularly since IPO. Regardless, the majority have grown tremendously, like ridiculously. So let's arrange it descending. So as I was saying, Tesla has achieved the greatest return. But let's have a look at Google. So this is a ridiculous number that, I'm sure you really can't believe. I mean, how on earth can we be looking at from $100, $96,000? Well, again, that's simply what happens with compound growth at 46% per year over the long term. So in this case, as I said, since 2004, when Google IPO'd. So let's arrange that then by, just to see. So let's look at some of the worst ones. Okay, so it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 of our 27 stocks that have gone negative. So we're looking at, in the case of System 1, it's gone down to only 89, so it's lost $11. To this one here, Ag Eagle Aerial Systems, which has the awesomest ticker called UAVs, which is kind of cool. But they've lost $99.40 worth of value. So yeah, essentially a 100% loss. But okay, cool. So then let's look at what you can get. So you thought $96,000 was good. Well, how about $191,487? So again, this is another one that was mentioned in the last podcast. Autodesk, who produce AutoCAD, basically the world's most popular CAD drafting. But also, I would say geospatial. There are geospatial things you can do with that software. Okay, cool. So how the hell, if they were only growing at 22.5% per year only, 22.5% is also completely and utterly stupendous. How the hell did they turn $100, thank you very much, into 191? I thought it was 196, but whatever. 100. I think that includes maybe dividends. Anyway, $190,000+. Well, it's quite simple. They IPO'd in 1985. So if you that there, right there, 22 plus 15 is 37. That is 37 years of compounding at 22.5%. You know, and that's only $100 to start with. Okay, so can you imagine, like, you know, back in 1984, was it 84 or 85? 85. Okay, 1985. um, you saw this cool new software firm that were producing that made CAD software and, you know, arguably geospatial software that solved customer pain in a good way. Lots of customer pain. So much customer pain, they sold copy after copy, license after license of this software. And you were like, you know what? I'm gonna put $100 on it and I'm gonna forget about it. Well, this is what you get, right? So this is exponential growth. This is why us little salary people in geospatial need to step the hell back. You know, I'm not talking about insider trading here, or, you know, trading on insider information within your own publicly traded business that nobody else knows about. I'm absolutely not advocating that. And you don't need to do that. I mean, look, all you need to do is look for businesses that solve so much customer pain that everybody buys them. Okay, this is publicly available information. Anybody can figure out, you know, with a bit of effort. But you, as someone in the industry, might see it a bit earlier and a bit more easily without as much effort as other people might. And that's what I mean by leveraging your participation as a salaried worker only in the geospatial industry. Just pay attention. Don't try too hard. Just watch. Watch for the software that solves the most pain points, that results in everybody buying it. And then just buy the shares. And I'm talking like $100. $100 is not a lot of money. Even in 1985, it's not a lot of money. So just put a bit of money on it. Away you go. All right. That's the whole premise of this podcast. And I think also it's time to celebrate. I mean, look at this. So since the start of this whole portfolio, so basically that means 1970, and that's because Pitney Bowes is in here. Pitney Bowes, where is it? There we go. So Pitney Bowes has been a terrible stock, by the way. 4% growth. 1968. So I bought, theoretically, $100 of Pitney Bowes stock in 1968. And bear in mind that inflation would have meant that was worth a hell of a lot more than $100. And that's something I'm not adjusting for in this portfolio. But it would have had a large effect, actually, over that period. But hey, you know, overall, the main point, it might be, as a result, the growth rate might be slightly less. But in the case of Pitney Bowes, well, you know, it's been a terrible business anyway. It's lost out to the index of all things over that very long period of time. Okay, so this portfolio starts in 1968 and goes to now. Great. So that's all a bit, you know, that's great. It's a nice sort of measure of what, in terms of the publicly traded opportunities within our geospatial industry. It's you know, I think it's worth celebrating, and I don't think all industries have achieved this kind of a growth rate, if I'm perfectly honest. But you might be thinking, okay, that's a bit, you know, it's too abstract for me because I wasn't around in 1968, and I totally agree. So we've got some reports here that Sharesight can do for you. So let's go to performance. And let's say, so I'm going to put it, so basically, I finished school in 2001, okay? 2001, I was just about to, that I think November we finished, so I'm going to put, you know, whatever, let's put the 30th of November until today. Because why am I putting 2001 or when I finished school? Because that's when I decided that I was going to study GIS and I was going to become a GIS professional. Funnily enough, I ended up changing my mind. I studied psychology and then I came back to GIS. But, you know, 2001 is basically when I first became aware of the existence of GIS. All right. So if I had known about investing back then, and I kind of knew, I had a cousin that used to like it, but it just seems like a meaningless and abstract thing to me. Great tragedy. I really wish, that I'd understood the power of compounding and how you can basically put Wall Street to work for you. I love that idea. You can make all these high flying bankers on Wall Street your slaves, your employees, basically, by purchasing shares on the stock market. It's a great little great image. I love that idea. Anyway, so if I'd realized, okay, so this is a hot enough industry, I did realize that, at the time that it was kind of a hot new upcoming industry that would be useful, especially for Australia's primary industries, so mining, especially projects around the country. So obviously there was a mining boom that happened in Australia. It was obvious to me that there was something interesting and good about this space, and obviously good enough for me at the time initially to commit to applying it and getting into a degree in that industry. So let's 2001 then is a meaningful year for me. So let's look at if I'd instead of just becoming a student and then becoming a worker, following the usual path from 2001, instead if I'd put $100 on the shares that in the geospatial industry that were available to me at the time. So what and then so it wouldn't have been all of these businesses that I could have bought, because some of them IPO'd, for example Tesla or Google. They IPO'd after I finished school in 2001. But what this is assuming is that I'd become an eager geospatial industry investor, and I'd paid attention to the industry thereafter from 2001 and kept putting $100 on every geospatial stock that came along. Okay, cool. So here we've got the performance of the portfolio over that period. 17% compound annual growth is still an utterly ridiculous and amazing growth rate. Like literally there's 10, maybe less than 10 superstar investors in history that have achieved that growth rate over the long term. Basically that's the level that the best investor in the world, Warren Buffett, has achieved over his 40 year career. 50 years in the past 10 years. The best investor in the UK, Terry Smith, he has achieved 18% per annum. But this is over 21 years, right? 21 years. So it's beat Terry Smith, $100 indexing approach into the geospatial industry and not thinking about anything, right? Just, we've got a geospatial IPO, we've got a big business that has acquired a geospatial company. Those are the two rules, and put $100 into each one, you get 17% compound annual growth rate, and you get over that period, $323,000. This is incredible. This is incredible to know. Like, wow, our industry has grown at rates that the best investors in the world, only the best, have achieved with incredible effort. Like Warren Buffett's known for sacrificing his family life. He abandoned his wife, he abandoned his children, blah blah blah. He has a good sense of humor, but not the best family life. Okay, whereas this totally effortless approach has yielded a totally ridiculous. I challenge everyone but the most high profile, CEO level, or global director level within the larger firms, geospatial industry employees, to have accumulated $323,000, just from over that same period, okay, from their salaries. It won't have happened for the very vast majority of salaried workers in the geospatial industry. But what was this? This was right under their noses. What this represents is the effort of all of those diligent workers, okay? All of us. So what are we going to do? Do we sit here and not pay attention to this? Do we just work and know that others are getting this? Is that what we're going to do? That's why I'm here, because I don't want that. I don't want to be that guy who just sits there knowing that somebody else is getting a 17% growth rate. All right. So thanks again to GeoAwesomeness. And yeah, I've actually been in touch with Mutakuma. I look forward to, maybe, I don't know, doing a podcast with him, or you never know where this is all going to take us. Okay, cool. So we've got our extended watch list here with a ridiculous huge number of lines showing us that Tesla was the best. And, Tesla has been a very difficult investment for a lot of people. It's been hated on FinTwit, this community on Twitter, because I don't know, to be honest, it's been an amazing ride from Elon Musk, but all of these angry, depressed, jealous people on FinTwit basically used it as a punching bag for the entire advance. And we're talking about an advance which was 189 times, okay? 100 bagger, nearly a 200 bagger. All right. So you wouldn't have had to worry about any of that. The rule would, okay, all right, so it's now a geospatial firm in 2015, so let's change this. So the growth that we got was still 21 times. Amazing. So it's really incredible how the geospatial industry is it's in all of these high growth parts of the economy. It's at the cutting edge, it's self-driving is a problem that humanity is, basically, in the case of Elon Musk, telling lies about having solved. But at least we're trying, and this is like, it's super cool. Even when it can drive a little bit, it's impressive. And here we are, the geospatial industry. We're the backbone of that. Without our data, the cars are not going to work. They're not going to drive themselves without spatial data. Okay? Without all the technology and software from our industry. Okay, so that's cool. I think you can see, again, for those who maybe don't know the geospatial industry, hopefully that serves as a nice intro to justifying your attention on this industry. Okay? All you have to do, again, is to pay attention, to put your money on whatever geospatial IPO there is, and additionally, any acquisitions of geospatial firms by other companies, buy those as well. System 1 has been a terrible investment, but they had to be bought because they purchased MapQuest. MapQuest was sort of the early 2000s, mid-2000s, one of the most popular web mapping, consumer web mapping websites out there. It was Google Maps before Google Maps. All right, good. So we've done that. We're gonna talk about a map because this is a geospatial podcast. So for heaven's sake, we have to have a map, and I look forward to making many maps and analytics and dashboards, and especially like map animations over the course of this podcast. But we're going to start with something very simple. So this is an investing podcast. So what investing of the form that's the easiest, the playground, the kindergarten of investing, is on the stock market. So publicly traded businesses, the general public can buy whole businesses. That's unlikely. Usually pieces of businesses known as shares via stock exchanges. So what Wikipedia's got here is the world's top 21 stock exchanges, arranged by market capitalization. So that's the sum of the values of all of the businesses traded on that stock exchange. So we're going from mind-boggling numbers here. So 26 trillion US dollars is the value of all of the businesses on the New York Stock Exchange. Unbelievable. and 1.4 trillion traded every month. My God. So we're talking, that's why this is investing is incredible. It's really interesting, isn't it? Like trillions. Who thinks about that? Who Nasdaq? That's another. You probably heard of that one. That's 17 trillion. And then you wouldn't have maybe thought of this, but you would know that I think is the Chinese economy is the biggest in the world yet. It's almost the biggest in the world. It's definitely second. And the Shanghai Stock Exchange is up there as well. So it's the third in the ranking, 7.3 trillion. We've also got the Shenzhen Stock Exchange, which is also in China, at 5.7 trillion. Cool. Okay, so you're probably thinking, right. Well, where are these places? So I thought about that too, and so I made a map. I mapped all of these stock exchanges, plus a few extra ones, just because I'm interested. For example, Sweden is not, it's in the group of exchanges, but it's not one in and of itself that's in the top 21, but in the group of Scandinavian exchanges, that group is in the top 21. Okay, so anyway, I just thought I'd show you a map of the world's biggest exchanges. So we've got places like Sao Paulo, we've got Johannesburg, we've got Sydney, where the ASX is. I've also added on the Indonesia Stock Exchange in Jakarta, just because it's a huge country. And it's maybe more meaningful to me because I'm originally from Australia. So yeah. Anyway, Tokyo Stock Exchange. What's this one? Oh, okay. So this is Busan. So this is the South Korea Stock Exchange. Here's Busan Bay. And if we go in a bit further, oh, hello. Here is the South Korea Stock Exchange building. Really cool, huh? So, but let's look at some other things that sort of stand out. So Tehran Stock Exchange, unbelievable, huh? Tehran, with all the sanctions and all of that, it just shows the scale of the Iranian economy, despite the sanctions, from all of the oil that they have. So this exchange, if we go to the list, this exchange has a value of, where is the Iranian flag? Tehran, you're probably seeing it before me. There we go. Okay, so it's 1.35 trillion. Okay, so this is incredible. Incredible that, this sanctioned country, the pariah state of the world, one of the axis of evil countries, this is the Tehran Stock Exchange, responsible for 1.35 trillion US dollars of value. Who's heard of a single Iranian business, by the way? There must be some really interesting ones there. It'd be really cool to do an analysis of one, actually, if I can get the financials. All right, so another thing to think about or to know about is that these buildings are meaningless these days, actually. And a way to sort of express that is to go over to the US. And actually, the best way is we can go to the Toronto Stock Exchange. We can see that it's permanently closed. It's weird. It was actually permanently closed in 1997, but for some reason, it's still on Google Maps. Who knows why? And yeah, so yeah. Anyway, so why was it closed? Well, now it's just totally electronic trading. It doesn't, they don't need an actual physical exchange anymore. So that then brings us to New York, and if anything, you would have probably heard of the New York Stock Exchange. It's on Wall Street. Surprise, surprise. There it is down there. So you would have seen the finance report on the news. There's all these guys, they look like idiots. They walk around with little vests on, stupid little vests with logos and an American flag, for heaven's sake, in a goddamn stock exchange. I don't know why. Anyway, these idiots looking at screens and looking important with their tablet computers, let alone, the absolute buffoon known as Jim Cramer on MSNBC. Or on CNBC, they don't do any trading at all. No trading happens in the New York Stock Exchange whatsoever, which is kind of funny because, it's not really funny, but when I went to New York in the last time, well, actually the only time, was 2018. I wanted to go into the stock exchange like everybody else and see it, but no, it's been closed since 2001 because of terrorism. But you know, the thing is that it's not funny at all. But if there was a terrorist attack on the New York Stock Exchange, nothing would happen whatsoever, because actually the trading happens at the New York Stock Exchange data center, 45 minutes drive or 50 minutes drive to the north, covered in solar panels, and it's just a data center, a bunch of servers, okay, and a really awesome fiber network, fiber to the node, fiber to the premises connection, okay. Similarly, the Nasdaq is to the south, and that's also in a totally nondescript industrial building in the middle of a bloody asphalt wasteland next to a bunch of an oil farm, essentially. A tank farm, right? I know that from my oil field days. You know, with a bunch of backup power generators out the back, right? So this is the Nasdaq, yeah? And there's no glamorous stuff on the financial news report going on in here, all right? There's a bunch of techs, going up and down the aisles, making sure the water cooling systems and the fans are still working, looking at blinking lights. So that's and it's also in Hong Kong, by the way. Let's go over to Hong Kong. Hong Kong, down here. Here is Hong Kong, and in Google Maps, I found the Hong Kong data center. And the hilarious thing is it's called the Hong Kong Exchange Exhibition Hall. Well, you bet it's an exhibition. There's nothing else, right? There's no real trading that happens in stock exchange buildings anymore. The real stuff happens at the HKEX data center. I mean, look at this terrible industrial, unglamorous building. All right, so this is, some interesting insights in this map, I thought. And it's good, to have a map. Here's the Shenzhen Exchange. So there's something interesting. So let's look at let's get some impression of the values. The Hong Kong Exchange is essentially $5 trillion dollars in the total value of all the businesses on it. Also, the Shenzhen Stock Exchange is $5.7 trillion dollars. So what were we looking at on the map? So here's the Hong Kong. So this is the data center is the Hong Kong Exchange. Here's the Shenzhen Exchange, and it's in the same area, right? So just look at this tiny little area on the map. Tiny little area that is responsible for $10.7 trillion in publicly traded stocks. So again, the scale. I don't want to sound like I'm going too crazy here, but. So let's go over to Mumbai. There's actually the National Stock Exchange and the Bombay Stock Exchange. Similar values here. So India, Bombay is 3.96, so call it 4. And the National Stock Exchange is 3. So $7 trillion worth of publicly traded firms are captured by these two locations on this little bit of the map. Again, it's interesting. You wouldn't have thought that India, the largest, it's an interesting contrast here too. So, the total, I'll set up a nice contrast for you. Let's go over to Brazil. So Brazil is a very large country. It's basically this. The population is about 220 million people. And here is the Bolsa Sao Paulo. In this very Spanish-looking, city. So, what is the value of the Brazil? It's the smallest on the list. It's 0.87, not even a trillion. Okay, so here's a nice contrast for you, justification. Actually, Australia's in the top 20, so regardless, it'll be on there. So number 17 is Australia, 1.6 trillion. So it's basically double that of Brazil. But what's the Australian population? The Australian population is essentially a tenth, about 25 million, 24 million, versus Brazil having 220 million people. But the value of Australia's stock exchange is double. And Australia is about the same size as Brazil as well. Yeah? You would think it would capture just as much potential in terms of natural resources, and so it brings up the question, how on earth one tenth of the population of Brazil in Australia responsible for double the value of its stock exchange? This is an incredible question, and so that I think there's some interesting things that you start to think about when you look into capital markets, so called, and it's great having the geospatial industry as a lens and a source of motivation and a direction, to slice and dice our way through this part of life and part of the world. So of course, I will put this map in the show notes. I'll put the GeoAwesomeness list in the show notes. I will put the watch list in the show notes. I think, because I've paid a subscription for Sharesight, I really recommend it. I don't know that I can share a link to this live chart, but I can export, I think, I can export it to somehow, and I'll at least provide you with a report from this system. How about that? To show you the overall compounding rate of our industry. If, again, we bought every single geospatial IPO or every business that acquired a geospatial business on the date that acquisition happened. So yeah, again, just as my concluding remark has to be 45% compounding rate since 1968 for this portfolio. And as we also found, since 2001, so in the past 21 years, 17%, which is still utterly incredible. And the strategy would have caused you, by the way, to purchase two of the world's most impressive businesses, Google and Tesla, without thinking about it beyond the fact that there was some strong geospatial component to those businesses. Again, geospatial is at the center of some really impressive challenges and achievements that humanity has made in the past number of decades. I'm excited about our industry. I think you will be too.